Burnett, and our focus today is Asian country credits. Here from Hong Kong is expert Johanna Chua. Johanna, thank you so much for being with us.
Thank you.
There's been a lot of market volatility in the United States, both in the bond market and the equity market. What does that mean for your Asian strategy?
Well, actually, Asian sovereign bonds have been pretty resilient. Surprisingly, with all the volatility that's affecting Latin America and all the other lower risk credits and in the corporate bond markets, Asian spreads have actually held in quite well. I think it's enjoying a sort of a safe haven status that most people see that Asian credits is a region that is continually improving, and the level of concerns about transparencies in the government is less of a concern, so people feel very safe.
Globally right now, there is great concern over the possibility of a double-dip recession. How do the different economic possibilities play into your forecast for Asia?
I mean, certainly if there's a U.S. double dip, which is not our base case scenario expectation, that is going to have an impact, a material impact on Asia, given that most of the region have open economies. But I think what has been very comforting in Asia is that throughout the downturn last year, and what we've seen since the crisis, Asia has been able to weather the storm because it has built up current account surpluses, very strong external balance sheets. Countries have been going through structural reforms, and the domestic demand is now there's a certain level of resilience that you're seeing in domestic demand, and at the same time with China being a very strong force in the region, providing a strong source of export market for the other countries in the region, that is being able to partially offset some of the weakness that you're seeing in the U.S. market, although of course not completely, so there will be some impact, but at least not as a significant blow or catastrophic for the rest of the region.
You mentioned China. What is your view on the region's largest economy?
I think China right now is one of our strong economies in the region. We've seen this growth being very strong, 8% growth in the second quarter. Our economist has revised the forecast for China. I think China is going to continually be a strong growth engine for the region.
One of the big influences on emerging markets this year are the impending elections coming up in Brazil. What does that mean for Asia?
Well, I think certainly if the Brazil election turns out to be a very volatile situation and the candidate that wins is not the one that the market likes, there's going to be a very much more high risk aversion overall in the market. And the country in the region that's going to get impacted the most is Philippines. And the reason being is not only is because Philippines is a lower rated country, the low investment grade, but Philippines is a country that needs to access the capital markets for external funding. And there's a sizable amount of funding that they need to raise. And therefore, the fact that the market is going to penalize their borrowing costs is going to have some impact on the way spreads are going to be affected.
Are there any specific political situations within Asia that you're focusing on?
I mean, I think right now, if you look at all across the region, the political environment is relatively stable. We've had some concerns about succession, political succession in Malaysia, but we're very positive that that's going to go forward very smoothly. Elections in Korea is sort of a non-event at this point in terms of its implication on policy. Political environment in the Philippines has certainly been much more stable with the royal government, so we're not concerned about that. There's some concern about political environment in Indonesia, but I think certainly relative to where we were before, this is a much better environment. So all across the region, I feel relatively comfortable with the political environment, certainly much better than what you're seeing in Latin America, for example.
Johanna, now this is always my favorite question, but what would you say your top picks are right now for investors that are more focused on safety, and on the other hand, for those investors that are willing to accept more risk in the region?
Well, I think certainly in the region, one of our top picks is definitely Malaysia. I mean, Malaysia is a country where we feel very confident about the credit fundamentals. It's a country where you still get pretty good pickup relative to what you're seeing in Korea, and especially the best way we like to play Malaysia is not through Malaysia per se, but through Petronas, which is the sort of the quasi-sovereign in the region, top corporate in the region, and that is, I think, the best way to play it. You get a very good 30 basis pickup over the sovereign, and Malaysia is now on review for possible upgrade from Moody's, and that means it's going to go to Baa1, and Petronas, which is the corporate, the quasi-sovereign corporate, is rated one notch higher than the sovereign, so that's going to be A3 rating, and we think with a single A rating, that's going to have a host of new investors that are going to come in, and that should be a very attractive play in the region.
Johanna Chua, thank you so much for making the trip.
Thank you.